Okay, on to primary markets yet again. Mayuresh Joshi joins in the penultimate day, Christmas Eve. Mayuresh, good afternoon. Thanks so much for joining in. It's turning out to be a really good afternoon or a really good last quarter for the Anil Dhirubhai Ambani Group stocks, Mayuresh. I'm jumping straight to the point. Reliance Defence, a large defence deal. Reliance Infra, serious selling off or deleveraging. Similarly with Reliance Communications, we hear they've also done a spectrum sharing agreement. They've got the permissions for that from Jan 22nd. So almost everything going right, if you will, in terms of news flow. Would you bet on any of the names within the group, though?
Afternoon, Neeraj. First of all, I think a very Merry Christmas to you, Tanveer, the entire team at ETNA.
Thank you,
I hope that the new year is very, very healthy, wealthy and prosperous. Coming back to the point of the ADAG stocks, clearly I think if you look at individually each of these stocks, RCOM is in the news for spectrum sharing, the deleveraging of balance sheet with the asset sale that has taken place. But have the core business dynamics or fundamentals improved for the company? In my opinion, clearly I think with the kind of capex and opex that the telecom operators generally need, including RCOM, you're probably going to see a huge amount of stress probably getting played out over the next few quarters. So again, I think the move that we're probably seeing is more in nature of how deleveraging is happening generally for the ADG stocks, Reliance Infra included. So again, I think the big order sign up that has happened with Power Defense, Reliance Defense rather, the deleveraging happening thereof is where we're hearing probably of asset sales happening on the cement part, the road assets. But clearly, I think incrementally, I think the cash flows need to improve substantially, and core business dynamics generally are not suggesting that. So I mean, I'm not ruling out any further up move. Probably 7-8% is still possible, 10% is possible, but the core business dynamics have not changed. So I think we are maintaining a neutral view on all these stocks.
Wow. Okay. So Mayuresh, you certainly believe don't look at any of these names for sure. Fair call. Having said that, Mayuresh, there are a lot of stocks which are in news today. So, for example, Biocon. Let's start off with that. Healthcare is in focus. The two new companies as well, and we'll talk about them too. But Biocon, we had Kiran Mazumdar-Shaw in the morning. They have launched that hepatitis C drug, and as a result of which, I think the stock went up as well. Though the market size is not defined, they don't have any target price or target market shares also as of now. What are your thoughts on Biocon in particular, because of this launch and even otherwise?
So clearly, as you said, I think the financials probably for this launch are not known. Look at the R&D expense. It's around 7.5% of the total spend, and they need to keep on doing that. There are 5 drugs as per the last quarter's release that has taken place, which have entered clinical 3 phase trials. Now I think the commercialization thereof, the patent filing thereof, will only happen by the end of FY17. The Malaysian insulin facility, which is probably coming up, is a huge capex drag onto the financials of Biocon. The biosimilars business has been doing reasonably okay, and that is where the whole intent or the whole valuations for Biocon would probably stack up. But do we see anything meaningful happening over the greater part of FY16, the greater part of FY17? Our belief is that R&D expenses still remaining high. They are still at the top end of their capex program, which would mean that the return ratios will remain capped. ROE is at 12, ROC is at 13%, which will not give share value or shareholders the value for the returns. So clearly, I think I'm still seeing subdued performance happening for Biocon, more or less to do with all these factors. So again, I think we'll prefer the other pharma stocks, which are probably relatively undervalued at this point of time, rather than Biocon.
Okay, of course, we heard the management of Biocon as well. As I said, Kiran Mazumdar-Shaw joined us early in the morning at 9:30. Hear out what she had to say on this piece of development.
As one of the licensees, we also are launching the next drug or the next combination drug for Hep C, which other companies have also launched. So we see this as an increase or an expansion of our virology division, to which we are very committed, and we believe that this new addition will also add to this particular business. It is approaching, it can have a potential of totally being a market size of close to 500 to even 1,000 crores in the foreseeable future. Our presence in this market is about 10%.
Okay, let's get in ideas at 255. Biocon is a clear trade for the session. At least the stock since this news has been consistently above the 500 mark, trading above that level. Ideas at 255 then. Mitesh, start off with you. What is it that you'd recommend?
I would choose a BTST and Reliance Capital. I think that still shows strength in a market which is not going anywhere. So buy with a stop below 415 for targets of 430.
Dr. Narayan?
I would like to go with a Voltas. I think stock has been pretty steady and gaining very, very steadily. No fireworks, but just a slow and very steady grind upward. 310.11 is where it is trading. I would put a stop at about 305 and look for a target around 320.
Interesting. Sandeep, what about you? Your top call?
Just BTST in a Jubilant Foods currently at 1520. Stop loss of a little below 1510 and a target of 1555, 1560.
Mitesh, good call there. You called it way early in the morning today at about 1490, currently at 1515. So good going for a Jubilant. What Mitesh has to do with this one is something that we'll find out after the break. Also get the chart of the day on the other side. Stay tuned. Back with closing trades right here on ET now. Okay, before we get into the chart of the day, Mitesh Thakkar, I want to come to you on a Jubilant Foodworks. Extremely good call at about 9:30, already in the money. My question is, are you in sync with Sandeep? Are you recommending staying long, or if people have made money, you would actually tell them to book profits?
No, I think I would be slightly greedy over here. I would look at targets of around 1545 to about 1550. So maybe you would want to hold this one. I think just trail your stop loss now to get cost levels, and I think hold on to this one. I think still looks good to me.
Okay, now for the chart of the day, and that is IGL. CK Narayan's chart of the day is Indraprastha Gas. And I believe you're recommending a sell call here, Dr. Narayan?
Yeah, that's correct. IGL sell call right now might actually fly in the face of whatever seems visible. But using some, let's say, price measurement techniques that we do within technicals, which go under the heading of what's called as harmonic patterns, I find that various legs of the moves of IGL are very well related to one another. Very typically, this produces a significant high or a low, which lasts at least for the short term or even sometimes for the intermediate term. So when IGL hit up into this, 520 zone, it had got into this exact proper relationship with prior legs, which makes it a kind of a potential high for the short term. And that doesn't become visible in the normal, let's say, techniques which are largely price driven and not relationship driven. So I think for those who are holding long in IGL, this might be a good time to take some profits off. I'm not really calling for a big decline here because IGL at a higher degree had a decent breakout upward, right? But this may have run its course for the short term. I think there'll be a pullback to somewhere near 500 to do a retest of the supports over there. So I think IGL at the current price should be sold off by long holders. Those who are a little bit more aggressive on their trading can try a bit of short, keeping a stop loss at about 525 and look for a target somewhere in the region of 500. We can revisit whether it becomes a buy again if and when it drops down into that buying area.
Mayuresh, coming on these stocks, there has been a run-up that has happened already on the back of what's happened in Delhi. Are they pricing in almost all of the positives, or do you believe that there is a slightly long-term story at play here?
So clearly, Neeraj, I think if you look at players like IGL, and if one really assumes volume growth to the tune of 8 to 10% happening over the next 2 years, again looking at the pricing and the EBITDA that they make, 9 to 10 dollars SCM, I think that is pretty reasonable. I don't see any expansion probably happening in that sense. So what you're probably looking is whether there's going to be any exponential increase in the volume growth happening over the next 2 years, which I frankly don't foresee. Whether there's going to be a sharp uptick in terms of how realizations will pan out, Again, I think I'm a little bit skeptical on that front as well. So for a re-rating to happen from these levels for a stock like IGL, assuming all these factors playing in favor of them, looks a little bit doubtful in terms of an incremental re-rating candidate for pricing to come through and pricing power to stay with them. So clearly, I think would wait for significant declines for companies like IGL. I think to a certain extent, it is fairly valued at this point of time, considering FY16 numbers to say the least.
Mayuresh, at this time of the year, everybody's looking at new ideas to start off the new year with. So what is it that you'd recommend idea-wise, your conviction thoughts for the coming year?
So Tanveer, I think out of the mid caps, Bajaj Electricals is something that I am liking at this point of time. It's a clear turnaround story. So if you look at the top line breakup, 69% of the revenues come from consumer durables and luminaires. 31% comes from the E&P segment, which was a big drag. Cost overruns happening there, working capital constraints happening there. But a lot of the legacy orders are out of the book, specifically as the E&P segment is concerned. When you're probably talking about newer orders coming through, they're coming at higher margins. Again, the order book of around 3,400 crores is a fair distribution between power distribution order, tower transmission line orders, and high mast orders to say the least. So clearly, I think E&P has turned profitable. We expect the EBIT losses that this segment had posted of 87 odd crores in FY15 to actually turn profitable by FY70 to a tune of 96 odd crores, with EBIT margins close to 5%. The consumer durables, I think they've got a very strong brand recall out there. They've got strong partnerships happening. On the luminaire side, they have partnerships with Trilux. On the lighting side, with Rural Lighting of the US. On the appliances side, with Morphy Richards, which has actually done well over the past few quarters. And if you look at fans, I think it is tied up with Disney. So I think there's a pure brand recall. It's got good associations basically on all these appliances part. And clearly, I think the replenishment strategy is working extremely well on the CD division for Bajaj Electrical, which has been sluggish, but would expect it to improve over the next 2 years. Again, on the financial front, our own take is that the EBITDA margin should show significant improvement from 2.1% in FY15, close to 5.8% in FY17. The trickle-down effect on profitability, because it has actually posted losses in FY15, it should actually turn profitable to the tune of 128 odd crores with operating leverage benefits coming through. And again, I think the debt to EBITDA would reduce significantly from 3.3x close to 1.1, 1.2x. So I think we've given it a valuation of around 0.6, 0.7 EV to sales, currently around 0.5 EV to sales, a target of 290 over the next 12 months.
So 290 is the target on Bajaj Electricals. And I think you just briefly referred to, or probably didn't refer to, MBL Infra, but give me the details, Mayuresh. I mean, why an MBL Infra compared to some of the others?
So Neeraj, clearly I think what we like about the stock is two things. A, it's an EPC player, and again I think it's got a mix of BOT projects. Now clearly if you look at the EPC side of the business, it's got a strong order book of 2,150 odd crores. The management has guided for orders of close to 3,500 crores. We're taking a very conservative view here, Neeraj. So again, 2,500 crores for FY16, 2,800 crores for FY17, and if the execution really happens at the pace that it has over the past, you probably see better fixed cost absorption happening, which effectively means that the EBITDA margin should expand from 12% to 14.6%. Having said that, probably I think if you take into account the valuations for the EPC business on a standalone basis, we're actually looking at an EPS of 26 odd rupees for FY17. You give it a multiple of 9, you're actually valuing the EPC business at 234, 235 rupees a share. So I think it's around 15 rupees from where the stock price is currently just for the EPC part. Now toss in the BOT projects. So 2 projects operational, 3 yet to come through over the next few quarters. Once they start generating cash flows for the company, our own take is in a free cash flow to equity holders methodology. I think 53 to 55 rupees can get added from the BOT projects itself, because they'll be having impressive equity IRRs. So clearly I think on a consolidated debt equity at around 1.6 times, we expect that debt to peak off by FY17, cash flows improving. So a target of 285 over the next 12 months on MBL.
Fair call. In fact, we also spoke to Hemang Jani. We will get his thoughts up in a bit as well. Mayuresh is liking these 2 names. Hemang spoke to us earlier in the day, and here are some of his investment ideas for the year ahead.
We think that given the thrust of the government on the indigenization, that is something big a trigger. We already have seen that the management has said that there is going to be a 10,000 crore inflow in terms of orders for BEL. And it is a debt-free company, okay, with a very decent ROE of 20-22%. So we are seeing a strong visibility there and available at a decent valuation of about 15-16 times. In the roadside, we like something like IRB Infra. The entire sector has been going through a lot of pain, but we are seeing a pickup in the order inflow. And we think that given the overall financial strength, the balance sheet, etc., IRB is extremely well placed to execute important projects over the next 2-3 years. Apart from IRB, we also like Ashoka Buildcon. We also like a company called Gayatri Projects, which is only specializing on the roads part. So we think that the best way to play this theme is to have a combination of 3 or 4 stocks, because in any case in mid-cap sector, it is better to have a portfolio.
Okay. And that's, of course, some thoughts from Himang Jani. C.K. Narayan, I'm interested in figuring out what within that vast gamut of defense stocks are you liking, if anything, on the charts, because a lot of them are active. Pipavav is just an excuse, but I've seen a bunch of other defense names. Walchand Nagar Industries, for example, had, I think, a fairly decent afternoon to trade. Astra Microwave, L&T may have sold the stake. It's up close to 10% in trade on extremely high volumes. Seen some of the others, even a Rolta is actually marginally in the green. Anything from these defense names, large, mid, small, that you have a fancy for?
Well, I'll have to answer that in 2 parts. First is that, from a trading perspective, these stocks only flare up on days when there is some news break, right? Like you have, let's say, Reliance Infra doing the gig right now, or you had something in Astra Micro. Astra Micro, I think, is more to do with that big block deal which you had, which was reported as of yesterday. That seems to have brought in the buyers at value area. Walchand Nagar, maybe there was some news out, I don't know, maybe the submarine thing, they're always connected with that. So whenever there is some news flow, all these defense stocks, they generally get lit up a bit. But if you look at it from longer term perspective, whether money is consistently flowing into them for this defense related whatever business they are, I don't really see substantial and consistent money flowing into any of these stocks. They are doing so in fits and jerks. Even Astra Micro, for example, if you take it, which is very, very clearly, and completely aligned with whatever is related to defense. You have the stock in a very broad sideways, and it's only if you buy it during those big drops that you really tend to make money. So it's the same thing with Walchand. It's the same thing with, that 3,000 rupee stock, I forget the name. It's a similar thing with all of them. It's only because Reliance Infra is there in the A group and in the futures, that is. And, there's also a big trading element in it that it's been sort of jumping up and down. I would say if you really want to play the defense area from a trading perspective, then just stick to Reliance Infra. A, it is in the futures. B, it's got options you can hedge your position with. C, there is substantial amount of liquidity you can get in and out whenever you want. And D, it makes a move along with the market every now and then. So you're not really, buying into something and holding on for weeks and weeks and weeks and getting tired of it. So I think defense play are very, very long-term plays, not for traders, but for patient long-term investors. I think defense contracts take 5, 10 years to play out. So I don't think traders really should patronize them. On days when these stocks are active, may it be a Rolta, may it be a Walchand Nagar, we should play them, take that juice off in a couple of days, and then simply go on to something else.
By the way, an ET Now exclusive on CESC. Bring up that one for our viewers. So yes, while the defense names are active, I think CESC is just starting to become active. This is big news. Yatin Johnson to tell us why is this important. Yatin.
Neeraj, some good news coming in for CSC, and what we are gathering from sources at this point in time that CSC has finalized the PPA for almost 300 megawatts for this Chandrapur power plant, and the signing of this power purchase agreement could happen as early as next week. Of course, these are all, regulatory things, so, the timeline might differ. But as early as next week is what we have been told, that CSC would be signing half of its capacity at Chandrapur, which is, 300 megawatts under the PPA. Of course, 2 names have emerged as far as the PPA signing is concerned with CSC. Number one is the Noida State Electricity Board and the Kerala State Electricity Board. Both of these boards will be, signing signing on a different occasion. Both of them will be signing a cumulative capacity of 300 megawatts. This is what we are gathering from our sources. Of course, the management, was guiding the analysts that by FY16 they will be able to sign some PPAs for capacity at Chandrapur, and now finally that thing is, happening. So this is a very big event for CSE, and if really this goes through, the uncertainties for earnings for CSEs go away. Chandrapur being a, loss-making plant, a PPA signing would help them, come at a decent generation PLF, and then, of course, rather than making losses, they will at least be in the black.
Yeah, Yatin, so give us, for the benefit of our viewers, maybe a bit of a history as well, because there is a lot attached to this, as I understand it.
Well, I was speaking to one of the analysts, just to get an idea as to what Chandrapur really means for CSE. They said that the Chandrapur power plant is 600 megawatt in capacity, and 50% if the PPA happens for that, almost 200, 300 megawatts get signed in the next 1 or 2 weeks. That will be a big positive, big relief for CSE. In fact, I was referring to a HSBC note. They cut the FY16 earnings estimate for CSE only because there was no PPA for Chandrapur power project. So that 36% EPS cut was coming in only because of the Chandrapur power plant drag. I was also again referring to a JP Morgan note wherein they said that Chandrapur uncertainty is something which is a key blockade for re-rating for CSE, and in FY15 alone this plant made a loss of 460 crores. So Neeraj, if that 460 crores loss gets wiped out, plus, if you get a sustainable plant load factor for this Chandrapur power plant, which is operating below capacity, and with the PPA coming in, your capacity utilization improves, then probably this plant could, become profitable in the next few years or so. So clearly, a big turnaround will happen at the company level if the Chandrapur power plant PPA is signed at a decent rate, which most of the analysts are expecting should happen in the next 1 or 2 weeks.
So that's the timeline. Remember, we obviously wouldn't know the rate. It's virtually impossible to know the rate per se, but maybe at a decent rate. And this takes care of 50% of the capacity of the Chandrapur plant, and which I think is really nice for CESE. This was probably that one overhang, as Yatin was saying, as per the brokerage notes as well. Well, but the good news, probably clarification that no money will go out for IPL. Now the Chandrapur PPA, retail anyway seems to be doing well, and Spencer's is on the right track too. So I think the times are not that bad for CESE. Mayuresh, have you looked at CESE at all? I mean, the IPL thing doesn't bother me at all because the company's clarified that the listed entities will not pay anything. And now this news about the Chandrapur PPA.
Oh yes, again a big positive, because as Yatin was mentioning, the 600 megawatt Chandrapur plant was becoming a drag on the power business for CSE, and definitely I think an incremental PPA signing, even if for half the quantum, again is going to be hugely value additive. Clearly, I think the other overhang for the stock was also the coal mine that it had bid at Sarisatoli. The kind of bids that it had given, the kind of negative cash flows were getting generated from the bid that it had given, is also playing on the stock. So in my opinion, I think if the Chandrapur PPA sign-off does happen, incrementally positive for the stock, with the cash flows, with the bid that they've done for the coal mine at Sarisatoli, I think still will keep on hampering their revenues probably at least for some quarters to come. But again, I think positive piece of news in my opinion if it does happen.
Okay, Mayuresh, stay on with us. Let's quickly go across to our research desk where Darshan is standing by with a quick snapshot of what dealers are recommending in the 10 minutes of trade left. Darshan, tell all.
See, first of all, Voltas is something that dealers are indicating, and they're recommending this on the basis of technical as well as F&O trends that they are seeing. They believe that it is forming a good base for which consolidation is happening, post which an up move is pretty much possible for the counter. The next counter dealers are talking about is Sun TV, which is one of the biggest gainers. It's up 5% in today's trade. Dealers indicate that 2 domestic mutual funds are actively accumulating the counter. And finally, Rico India is down 10% in today's trade. We tried to find out what is happening. What we have heard from dealing room is that one of the large HNI who has a big stake in the company, he is actively selling in today's trade. So Rico is something that dealers are watching out for today.
Thanks a lot for that, Darshan. Darshan, I'm throwing this out of the dark at you, but I remember you, and correct me if I'm wrong, in your high price phobia segment, once talking about Rico as well. Just give a flavor of what the earnings, etc. of Rico would be for FY16, FY17 maybe.
See, if you're looking at it...
if you remember, Darshan.
Not at the back of my mind, but you know, the big concern for RICO currently is the fact that they haven't actually declared their second quarter numbers. So that is something that is keeping the stock jittery. They changed their auditor, and because of that, you know, they haven't been able to, when, you know, most of the companies will come out with the third quarter numbers, RICO has not come out with their second quarter numbers also. So that is making the street a little jittery as to what exactly is happening there, and that is the reason that, you know, there could be more sell-off that could come in.
Thanks. Anyways, I threw it out of the dark. It's very difficult to remember numbers for almost all the 1,500, 2,000 odd well-traded companies. Thanks for that. So that's essentially what dealing rooms are recommending. Maybe an HNI associated with the stock for long would have sold out. 10% off for RICO. The market's just nudging their way back into the green. So before I talk about RICO with Mayuresh, I think I should get in our technical experts to speak about the closing strategies, if at all any index trades, then that. Sandeep Wagle, to you first. Your top closing strategy for the day.
You know, the BTST in a CESC that is broken out of strong resistances at around 520, currently at 523, 524. I would buy it with a stop loss of 518 and a target of 535.
Mitesh, what about you? Your top call?
BTST and Investment Bank, last 1 hour has been very good over here. Good price and volume action. I would have ideally wanted to see the stock get past 950, but I think can be bought now and you can add more once it crosses 950. So keep a stop below 940 and look at targets of 965, 970 as short-term trading targets.
Dr. Narayan, what about you?
I would buy an Asian Paint. It has been straining to effect a breakout upward. I think it is doing so right now as we speak. 885 to 882 is the range that I would look to buy it with a stop at 875 and look for a target around 900 on Monday.
Sandeep, I'll come to you. You couldn't hear me earlier. An update on the fantastic call on J Corp.
Neeraj, the breakout has begun, and if somebody is holding it, I would hold on all the way till 80, 82, currently at I think 68 or something. So yes, if you are a very short-term trader, book part profits, but the weekly pattern is too good, should not book profits. I would trail my stop losses. I think I had given the call at 54, 55. The stop loss can now be trailed to even 59 or so. And hold on to 80, 81. That should be the next logical target, which should be achieved in the next few weeks.
Look at V-Mart retail. Remember, the news is that the authorities have now permitted FPIs to invest up to 49%, if I'm not wrong, in V-Mart. And that stock has gone up 20%. 19.55 had a splendid start, and it's only built on gains from there. So really good going for a V-Mart retail. That one retail stock which has confidently said that it will do 25, 30, 35% CAGR for the next 5 years. Good going here. Retail is the flavor, Mayuresh. There is a V-Mart which is up 20% for technical reasons, of course. Future consumer, you can call it retail stroke consumer company doing very well. Rakesh Biani yesterday on the channel was speaking very highly about the growth trajectory for future retail as well. Shoppers Stop is not doing too badly. Do you like this space? Do you like V-Mart or something else?
Unfortunately, I think we don't cover a majority of the stocks within this space. But again, I think the SS's growth is something that we would like to closely monitor, and it has not shown an increasing trend either over the past few quarters. Having said that, probably if one really assumes the uptake probably to happen in urban consumer spending, and with the 7th pay commission probably coming through, expected to have some amount of incremental spending over the next few quarters, you might see the SS's growth actually inching up for a lot of these players. But do we see that happening at this point of time? If we do a quarter-on-quarter comparison over the past 4 quarters, I think it is still subdued at this point of time. So I think we'll just wait and watch and probably assume that numbers should start coming a little bit better over the next 2 quarters, and then we'll probably take a call on the sector.
Everything in defense is moving up. I saw Simco now, which is up close to 11%. Really good going for that one. Astra Microwave, 11% as well. We've highlighted these stocks, but somehow defense seems to be the theme of the day. Mitesh, leave out a Reliance Infra. The others, Simco, Astra Microwave, I think you mentioned a BEL probably, BEML, almost everything related to defense is doing well. Any of the smaller names that are catching your eye?
Yeah, definitely the sector is buzzing. So I'm not tracking all of them, but I think Astra Microwave is something which I like a lot. The stock needs to get past levels of 153 to effect a fresh breakout. It may happen next week. I think once that happens, I think I would look at targets in excess of 175 over here. Still looks good. I think in case you get it on a mild decline to about levels of 141, 143, I think that'll be a good range to buy into, or wait for 153 to be taken out.
So by the way, there's a stock called Skill Infra, which is up 10% because it's got some percentage stake. I think the value of its stake compared to the market cap of Skill Infra is way higher. So I think the market cap is maybe 1/4 or 1/3 of the value of the stake that Skill Infra has in Pipavav Dock. And imagine, you don't know if Pipavav Dock will maintain the gains or no. But on the up 20% uptake, Skill Infra has certainly moved up 10%. Good going. After a while, I'm seeing Kolte Patil make a move. Very interesting move there. Real estate is iffy, but Kolte Patil has had a serious move today. CK Narayan, have you looked at this one? Good volumes as well. Almost 1 million shares on the NSE.
Not that I've seen it recently, but then I think, in real estate stocks which are out of the normal orbit, which I'm referring to your HDL, IB Real Estate, etc. Stocks like Prestige, stocks like Brigade, stocks like Kolte Patil, these have all been doing fairly consistently, and they have been finding, let's say, real buyers or longer term investors who are putting money into them. They're not really gung-ho stocks, but I think slow and steady is what I could describe them as. Not really the kind of stocks that most people go in for, but for somebody who wants to have, let's say, under inverted commas, safe exposure to, let's say, real estate stocks, I think Kolte Patil would certainly fit the bill.
BF Utilities has also picked up. That's 5% higher. You can see almost 32 lakh shares traded on that one. So big spurt in volume activity too coming in. Sandeep, a look at the charts here.
Sandeep, could you please repeat? I couldn't hear you.
BF Utilities, Sandeep.
Positive view. I would talk of a target of upwards of 710, 715, somewhere around that. And any move towards 650 should be bought into. I don't think on the downside 620 should be broken, so little deeper stop loss, but one has to take that. And over the next few trading sessions, I think 715, 720 is very, very likely. I would play for that 3-4% upside.
Okay, I have to ask this, our Twitter accounts are asking our technical experts for some of the calls that were made yesterday because the stocks were very active. Mitesh, let me come to you. Bharti Infratel, Aurobindo Pharma, two stocks where there is a consensus call. I'm just using you as one advice. What does somebody who entered these stocks yesterday do today?
See, today we have not seen follow-up, but typically I think after a breakout there can be a situation where the stock kind of consolidates for a day or two. So I'll be very comfortable holding. In fact, Infratel at about 411, I think today's low, or just below it, I think around 410.9 levels. I think I would be very comfortable adding on to long positions. Keep a stop loss below 403 and so, and I would still maintain targets in excess of 430 to begin with, possibly even higher levels. And Aurobindo Pharma stock, which has been on new highs, I think it's kind of given a slightly negative candlestick pattern. So the only precaution which I will take here is to trail my stop loss to about 857 levels.
Very quickly, CK Narayan, would you want to add to that? Oro, Bharti, actually even ICICI Bank.
See, Oro, I mentioned in the morning that around 880 I have some price cycle kind of resistance. It hit about 882, 883 and it's slightly down for the count. But I would want to visit this on Monday to see if any selling emerges or any weakness comes before really selling out. So it's only a take profit kind of situation, but most certainly not a sell. For the moment, it's not a buy. We'll have to look at how it fares in the next week. As far as ICICI Bank and most of the banks are concerned, they have been a bit of a disappointment because the Bank Nifty showed a lot of promise initially but didn't really follow through. So most of the banking stocks were not able to build on their initial show of strength. So I think the jury is still out on the banking pack, so not to really hold on to position there until we see some more signs of strength.
Okay, gentlemen, let's start wrapping up the market. You're looking at, well, a whole host of stocks are active in the broader markets, which I'll let Neeraj wrap up. For the index by itself, we've just about found our base at 78.50 in the session. The broader market is doing a shade better. If we drill it down to specific names, you have a Vedanta, Cairn, Hindalco, Gale. It's again the commodity names which are leading from the front. There is, of course, Bharti Airtel also, which is closing into a 2% gain. Tata Power, Tata Motors, those are showing traction, and some of the banks have pitched in too. But it's a market which on thin volumes has not seen much participation, which is why it's split down the middle. Zee Entertainment is down. You have some of the private sector, public sector, large cap banks also under pressure. And of course, IT not doing a whole lot.
Well, defense is doing a whole lot. Reliance Infra leads the charge. Pippa Dockyard, Astra Microwave, Simco, Walchand Nagar. A lot of stocks extremely active in the session today. V-Mart Retail, because of specific news, is up 20% in trade. Mangalore Chemicals off the circuit, still up 16%. Reliance Industrial Infra and Jaycorp, two stocks tend to move in tandem, have had a fantastic week for themselves. Then there is a DCW up 12%. There is a Colte Patil up 11.5%. J Kumar Infra, 11% gains for that one. Wow, that is quite a bit. It's not a small stock, but doing okay for itself. Steel Strips Wheels up 10%. Piramal Phytocare from a low of 30.35 to a high currently of 134. It's been a 4 or a 5 bagger, 4 bagger, so to say, in the last 52 weeks. So splendid going for this one as well. That's pretty much about what's happening in the really small cap or the micro cap space. Then I shift my attention to the Nifty Mid Cap 50, and there are gains to Biocon. Yes, cannot miss that. Good going there. I think the other really interesting one is Sun TV. Somehow we missed that one today on the show, but Sun TV is up 5% today. Was up in trade yesterday too. Good going. And Jubilant Foodworks closes in the day's high about 15.22. L&T Finance Holdings, well, that surprised many. I think yesterday there was a sell call on that one. I don't know from who, but in today's session it's actually gone up 4%. So good going for L&T Finance Holdings. And CESC on that ET exclusive is up close to 3% at 524. I think Godrej Properties too, we had an exclusive piece of news today. They might be doing another large deal in BKC. That stock is flattish though in trade. Okay, that's about it. There are not too many losers, mind you. A few gainers though. IDBI Bank is probably that one stock which is down. Banks at large, Union, Syndicate, Andhra, etc. So the smaller banks haven't had a good day. Allahabad, Karnataka, etc. All of them in the red, even a Canara Bank. So PSU banks are not having the greatest of days. But broadly, it's not a bad day for the broader markets, which have done very, very well. Nevertheless, let's get in final thoughts from all our experts. And I'm surprised we didn't talk Sun TV. So Sandeep, I want to come to you to talk about Sun TV before I go to Mayuresh Joshi. Brilliant chart the last in today's session. Yesterday too spiked in trade. What do you do here?
Twice during the day, and any move towards 405, 407, it is closed at 414, should be bought into. Take a positional view, and I would talk of a move beyond 450. Even on a Monday, Tuesday, this stock can give you a 420, 425 up move, but I would play for that bigger move. Even 460 is possible. So I would play for that 8 to 10% trading upside in the next few trading sessions.
Mitesh, you had a call here, Sun TV. You believe this gain can extend itself?
I think it should. The pattern is quite positive. To me, I think I would look at targets of roughly around 435, 437. I think then 460. I think Sandeep has highlighted pretty similar targets. But I would still be a buyer with a stop below 404, or any 1% kind of decline would be an excellent level to add on to this one.
Okay, Mayuresh, what are you doing now? It's the last week, might be a bit of a slumber too, but would you be active in select pockets which are showing a lot of activity? Defense for sure is.
Well, yes, Neeraj, again, I think in defense, Bharat Electronics is something that we discussed probably last week. Again, cash-rich balance sheet, decent order size, and the valuation is probably a little bit higher compared to the trailing averages. We still believe there is worth in the stock in terms of how the top line and the bottom line will grow and how margins will pan out. On the broader markets, probably I think Bharati Infratel is something that will probably like on decline. So any level around 390, 380 is something that I'll prefer. The intensity of 3G rollout over through 2G, the tenancy ratio is improving, and again the realization improving per tower with a cash-rich balance sheet. And again, I think you're probably looking at top-line growth happening at a very decent pace. And though the energy vertical probably let them down in the quarters that have gone by, we expect slow and steady improvement happening on that front. And even on the media front, as you were mentioning, Neeraj, I think Z is something that I'll like again on declines between those 390, 380 kind of a level. Advertising growth has been stupendous for Z, but again, I think we'll moderate our advertising growth expectations to 20 to 23 odd percent over the next couple of years. Again, on the subscription part, the phase 3, phase 4 digitalization might remain a little bit patchy. So again, if you go by the historical trend of a 9 to 10% growth on the subscription part, you're probably looking at decent top line growth coming in for Z. Sports losses would be curtailed below 100 crores or even below that, as the management was indicating. So clearly, I think Z again, if it comes down to those levels, I think it becomes an extremely lucrative buying opportunity for long-term investors.
Okay. Thanks for that, Mayuresh and Dr. Narayan. Just before we let everybody go, a word on how do you expect the markets to be next week? Promises probably could be a quiet week. What do you think is the trend?